Welcome back. This is part 2 of our financial physical series where I tell you the questions I ask in a portfolio review and why I ask them. And no, I'm not a financial doctor. I'm not a financial advisor even. My name is Mawuli, Vodi with Financially Present. And I'm a financial expert that just wants to help you get where you need to be with your finances. If you're new here, welcome. If you're not, thank you for supporting the channel. If you did not watch the first video, I want you to pause this video right now and watch the first video so that it all comes full circle with this information. Because if you're in your 30s or 40s, and you've never been asked these questions, you need to know this stuff right now. Your financial health is directly correlated with your physical health, trust me. And when it comes to meetings with your financial planner or an advisor, they should ask you questions like this that will help with your tax situation. They'll ask, do you own a small business? It also doesn't have to be small, it can be big as well. But there's a reason behind that. The way investing works and the way the tax code works, it benefits people who own and people who create. So if you have a business or you own property, there are different tax credits, there are different deductions, there are ways to depreciate assets. There are so many things in the tax code that opens up when you own a business. If you're thinking about it, that's something that's good to know too, because you can also start the prep work. And no, I'm not a tax professional, but I understand these situations. And I know that when you have a business, there are major differences with how you can file your taxes compared to someone who has just a very straightforward situation. There can be little to no complication with someone who does not own a business or does not own property. But if you do, then the tax code is opened up a little bit more for you. And this is why we see a lot of headlines with people with corporations and how they can pay less taxes and things of that nature. And in a portfolio review, for me, I would now understand that, hey, maybe I need to bring in a tax professional to help with this situation or to provide some additional support. But it opens things up and it changes how the conversation flows through this portfolio review. Now, the next question I ask people is much simpler and a little bit more straightforward. And that's, what fees are you currently paying for your investments? You see, when we have these type of questions, the answers can range from, hey, I'm not sure, I don't really know, all the way to, yes, I pay, 1.25% for my assets to be managed. Or you might even say, hey, well, I know that my mutual funds have fees in them, I'm just not sure. Whatever the answer is, it helps me understand that we can zero in on some of the fees you might be paying and you're not sure of, because the fees directly correlate with the returns that you can get in the market or through other investment vehicles. So knowing your fees is important. And if you don't, that's just added to some of the homework that we may need to do during this portfolio review. There are plenty of options when it comes to the fees, and you may simply just need someone to help walk you through this, because the difference between having your fees or knowing your fees right now and not knowing your fees could be you reaching your goals years and years sooner than not knowing them right now. Imagine trying to run a marathon with everyone else, but you're wearing a weighted vest, and that weighted vest being the fees that you're paying. And it would be great to either lighten the vest or take it completely off so that you can run this race with everyone else, and it can be somewhat fair. Okay, so the next question, this one is very practical as well. When you retire, what additional sources of income do you believe you'll receive? And this is a multi-select answer for various reasons, because obviously you can have income from different sources, and it could be, an inheritance that's expected. You could be pulling from a 401k. Maybe you could have a defined benefit plan or a pension at your employer that you're counting on. Maybe you have, you receive income from your spouse, or you're expecting to outlive your spouse or something along those lines. We have no clue. Or you might even prefer to continue working in retirement. If you're anyone like me, I actually believe that I still want to work when I'm in retirement. And if you're like that too, let me know in the comments below. But I want to live a lifestyle where work is somewhat optional. And the type of work I would do in retirement wouldn't be significantly heavy lifting, but it would be something that helps keep me sharp and keep me able to just make contributions to a Roth IRA or have some business travel and leisure travel. So that's just my perspective. But in knowing that, you can frame this whole conversation much better. And it gives some realism to the numbers that we're actually looking at when we look at your total assets. Okay, so the next question is where I start to have a little bit fun. And for me, that's how long have you invested in the stock market? If it's less than a year, or between a year to 5 years, or 5 to 10 years, or 10 to 15 or 15 years and longer, like, I need to know that. As someone who's going to help you, this is critical, because I've lived and invested through the last 16 plus years, and now I have an idea of what I should be expecting in your portfolio. So, for example, if you've invested since 2008, you have seen significant growth in the investment markets. And if you aren't partaking in that, then now I know the type of work we have to do. This is going to be a heavy lift. You know, if you've only invested for the last 5 years, you've survived through a pandemic, which is great, and you've seen some growth, but not in comparison to someone who's invested the last 10, 15 years. Someone who's gone through, you know, the economic crisis of 2008 and tech bubbles and recessions, and then also a pandemic, and still being able to have investments be on top, supposedly. Your investment portfolio should be decently sized if we're talking about you've been invested for a long time. And if you haven't, that's okay, but now it frames where we can start. And the timeline of how you've invested, it also tells me what type of risk tolerance you may have. You know, someone who's invested for that long, but then if I look in your portfolio and all I see are CDs and bonds and fixed income properties or fixed income instruments, then we have some more work to do. But it all has to come together when we look at these different questions and the answers that you provide. Okay, so the next question might be, if not the most hated, the second most hated question. If you're looking for the hated question, that was the budget question that I asked in the first video, so make sure you check that out. But this question is a little bit different. Approximately how much non-mortgage debt do you have? Credit cards, student loans, auto loans, lines of credit, etc. And I know some people might feel embarrassed to talk about their debt, how much they owe on a credit card or what they're borrowing, but that is so important when it comes to managing your finances, because we're talking about your financial health and we need to be honest and upfront about this. And like I've mentioned before, if I'm coming to help you fix your financial house, if you have a broken window, you know, I might not sprint to your rescue, right? But if your kitchen is on fire, then I'm calling backup and we are running full force to make sure we don't take down the whole house when we help with these repairs. And we're trying to salvage as much as we can. And similarly, someone who has significant debt, especially non-mortgage debt, that is eating away at the benefits of investing. And we need to figure out how quickly we can tackle this. And this will also tie into our budget and how much extra income we have to apply pressure on some of these areas that need work. Another thing about debt is some people have a different debt tolerance than others. So some people are just completely more comfortable with having it and holding it, whereas there are other people that want nothing to do with debt at all, and they want to make sure that that's taken care of before they even just focus on investing. And I have a different school of thought on that as well, but at the end of the day, it is a case-by-case scenario. So it has to require a deep dive. We'll look at it, and then we can figure out the next course of action. I just want you to think of it like this. Depending on your goals and how comfortable you are with debt, like credit card debt, it can change how soon you might retire. That's the level of impact we're talking about. So it does require us to look at it, because at the end of the day, this is your financial health we're talking about. The next question I get into is more specific to investing. What type of investment experience do you have? And this is somewhat of this is a range, you see, because if you have experience with mutual funds, you might think a certain way. If you've invested in crypto but never really bought stock, that's interesting as well, but not completely abnormal. It's a little nerve-wracking, but it's not abnormal in this day and age. But if you've traded options but never bought and sold stocks, that's also a little nerve-wracking as well. But these are things I need to understand because it will spell out some of your risk tolerance and maybe some of the urgency you've been applying with trying to help your financial situation. And now I can digest that as someone who's going to help frame the support that I can give you. If you have no investment experience at all and you're only tied to banking products like CDs and bonds, that's a little concerning as well too. It's depending on your age, but it allows us to understand, like, how can we increase that investment experience? And is it through the knowledge? Is it through just complete guidance? What does it require? So this is why this question is so important. Now, the next question is a big part of your portfolio. And that question is, do you own life insurance policies outside of a group policy from work? Okay, so this is critical because I need to understand whether or not you understand your term life policy, whole life policy. Do you own a universal index universal life policy? Do you understand benefit riders? Do you know about surrender charges or cash value? Are those things you're interested in? Are those things that you want to stay away from? I have a particular stance on investment products related to insurance, but insurance as a whole, it does fit into your investment portfolio in such a way, and it helps influence the type of risk you're going to be willing to take in investment markets. So it is critical to understand what type of insurance you have supporting your portfolio. When you introduce insurance into your investment portfolio, sometimes it's just there to complement your investment strategy or to cover a large expense like your home, or it's to provide your daily living costs when you retire through annuities. So it really depends on your stance, and it has a big impact on what you do. As an investor, you're gonna have some varying or some different perspectives on the insurance policies that you have. And for me, as someone who's supporting you, I need to understand how well you understand these products, because there's a whole history of people who have bought insurance products without understanding what they do, and then they were disappointed with the results, and then they stopped paying their premiums on their policy. So all of this weighs in. Is it something that you should continue including in your portfolio? Is it something that you should just figure out differently and see how you can get the benefit out of it now? Are you in an investment specifically for the cash value? So all of this weighs into you and your decision making as an investor, especially when it comes to insurance policies. If you're interested in a portfolio review, make sure you get your free 10 crucial steps to becoming financially present. You'll see that link below. You'll be added to my email list. That way you can get resources and tools to make sure that you don't miss out on future content and support. And this is specifically from someone who just takes a general interest in your financial well-being. And for the remainder of those questions, check out the next video coming out this following week. Stay present.